Good afternoon, and thank you for joining us. My name is Michael Bolello. I'm the Senior Vice President for Marketing and Communications with Wine and Spirits Wholesalers of America. I'm also a Director of Access, which is a craft wine and spirits program at WSWA. And I want to thank you all for joining us today. In the face of unprecedented market shifts to the wine and spirits marketplace, data and analytics is equipping industry leaders with the information needed to forge new paths to a post-COVID-19 world. The COVID-19 pandemic is having a significant impact on our on-premise business partners nationwide. And so the purpose of today's webinar is to showcase SipSource data, along with the brains of the operation, our lead analysts, Dale Stratton and Danny Brager, two industry veterans who closely track developments in our industry and are using our data sources to help SipSource subscribers understand the resulting changes in the wine and spirits consumption across categories, brands, and channels. Today, our goal is to provide a 2021 holiday preview, an important time of year for the industry, as well as a glimpse on key drivers for 2022, because we all want to know how to best handle promotions, out of stocks, pricing, and targeted marketing campaigns, as well as just gain a better understanding of the most exciting, inclusive, dynamic, and competitive alcohol marketplace the world has ever seen. Before I turn it over to SipSource's Dale Stratton, I'd like to remind everyone this is a live session. You are welcome and encouraged to send your questions via text into the chat, and we're going to hold those questions, and we'll pick a few to present to our panel of experts and get those answered. So at this time, I'd like to turn it over to Dale Stratton.
Thank you, Michael. And calling the current marketplace dynamic is probably an understatement. We've gone through some changes that are like no other. Danny and I are going to be covering a substantial amount of information. For those of you who don't know us, Danny Brager, who will speak here in a second, former SVP of Nielsen's alcoholic beverage practice, was there for over 20 years. I worked closely with Danny and is extremely well known in the industry. My background, I worked and ran insights organizations for both Constellation Brands and E&J Gallo. And now Danny and I do consulting works, and we work with the WSWA on their SipSource tool, which we will highlight that with some other data sources today. Danny.
And good morning, everyone. Dale said a second ago that the marketplace is dynamic, and that's an understatement. I'd also add into the understatement category, the data is messy right now. COVID has hugely impacted consumer behavior, and it's hugely impacted the comparisons that we're all looking at now. So it's really important to understand what channel are we looking at, what part of the country are we looking at, what time periods are we looking at, what time periods are we comparing against. And having a holistic view of on and off premise is especially critical to really understand total industry trends and to try to filter out what changes will endure, what will return to pre-COVID norms, et cetera. So Dale, can you tell us a little bit more about SipSource?
For those of you who are not familiar with SipSource, SipSource is distributor aggregated data. And you can see the list of wholesalers across the country that are contributing their depletion data. That data is then given to VIP, and VIP then attributes it so that we're able to cut the data by on-premise, off-premise, by various product groupings, price tiers, geographic regions, and that data is then available via iDig. We use this very much so, and it came in handy with the big switch from the on-premise and off-premise with what occurred last year. Simply put to me, SipSource is the single best source of data for the three-tier beverage category, and we will demonstrate some of that data. Danny? So what are we going to talk about today? As we think about where we're going to go, and Michael summed this up pretty well. Really, we're going to talk about, first of all, a little bit of a look as to how important is the holiday season and why do we matter and quantify that. I'm going to take a real quick look at what happened in 2020 that is impacting everything that's going on now. We're going to dig in pretty deep on what to expect for the next 3 months of data. When October data comes in, November and December, what is that going to look like and what are we anticipating? And then what does that mean for 2022 and what is that going to do for next year? Danny?
One more, Dale. Then we'll lay it out.
I'm trying to get it over to you, Dan. I need to look that up. So where we sit right now, and we're looking at this on a monthly basis. And as you look at this data, these are 12-month rolling periods, except for the last one, which is the latest 3 months. We're able to cut the data into those time periods. But you can see what's been going on is that spirits have been outperforming wine and doing so pretty dramatically. As we kicked into this year, starting really with March of this year, we saw the wine category start to go into decline. And that has continued. So right now on a rolling 12-month basis, and this is September ending data, spirits are up 5.9, wine is down 5.4. As we look at the latest 3 months, spirits are about the same, 6.1, but wine is even worse than the latest 3 months, down 8.9%. Now, with that, I'm confident I can hand it over to Dan.
So let's talk a little bit about the holidays and how important they are. First of all, holidays always sound good to me, but from a wines and spirits perspective, why do we care especially about the holidays? So if we think about the last 8 weeks of the year, and this is pre-COVID, if we look at 8 weeks out of 52, that's 15.4% of the number of weeks. But in terms of wines and spirit sales, those last 8 weeks contribute over 20% of the total year volume. Obviously, much more so than the 15.4%, and much more so than the importance of the holidays to the beer category. So consequently, wines and spirits share of total beverage alcohol in the off-premise rises significantly during the winter holidays. And this is based on Nielsen IQ data, where we can see that wine share in Thanksgiving of beverage alcohol goes up 17%, then goes up 20% versus the non-holiday period during the Christmas and New Year period. Spirits benefits in particular through the Christmas and New Year's period with a share improvement of 25% over the non-holiday period. So obviously extremely important to our two categories, wines and spirits. So what happened in 2020? Well, last year, as everyone remembers, was a very, very, very long year. And many of you, I suspect, were foregoing your usual Thanksgiving or Christmas, New Year's plans and sort of thinking more about where you're not going as opposed to where you are going. Or let me put it another way, given cannabis legalization that's, as you know, expanding across states. Who would have thought people would be smoking weed at a family gathering, but the illegal part would be the family gathering. So it was obviously a pretty tough year. Normally, an average week of sales in the last week of the year is about 1/3 higher, that 33% that you see here, than it is compared to an average week that excludes those last 8 weeks. But last year, the increase was only 23 to 24% higher. And I would have expected it to be even more so given that people weren't going to restaurants and bars. And again, when you see Nielsen here, this is just the off-premise. So last year, that normal increase of sales during the last 2 months of the year were pretty muted, pretty depressed. And again, even more so given those on-premise closures. And I think Dale's going to quantify that even a little bit more here on this slide.
And it's no surprise to anybody that we have seen a shift between the on and the off-premise. But with SipSource, we're able to really quantify what that looks like. And what we've done here is looked at key periods from that pre-COVID, which is the 12 months ending February 20th. And what we saw was an immediate dip as the on-premise really got shut down. And the period in 2020 of March, April, May, and June, on-premise sales were down 68.1%. Now, we did see that conversely, that spike, 18.3 go into the retail side of the business. Then July through September, we saw some normalization. Things opened back up to a degree, but still that on-premise business was down 44.1%. Then it dipped even more during the holidays, October, November, and December versus the previous year, as people were staying at home, not traveling and not going out doing the things that they would normally do. And during that 3-month period, on-premise sales were down 48.9%. And you can see that it wasn't as offset there with the off-premise only being up 5.6. The net of it is after 1 year of being under COVID, the on-premise got cut in half. The on-premise business was down 53.2%, and it was offset by the move into retail up 13.5, and a net of 3.1%. But any way you slice it, that is significant. And it will go on as we see, as we look towards what's happening further in this presentation.
2021. I mean, what should we expect? What will we see? Well, let's hope it's not this. You know, last year it was a case of where aren't we going, and that was a nice picture on the right-hand side. But if people aren't sitting in seats, that's not going to be too helpful. Let's hope rather it's more like, looks more like this, either celebrating in the home or celebrating out of home. So Dale, what do you think? I mean, what should we expect?
I think when you look at what to expect, Danny, and as we go, and we've all heard about supply chain shortages, supply chain interruptions. We're anticipating we're going to see some supply shortages as we look at it. However, it's not like you're going to walk in and see an empty spirit shelf or see an empty wine shelf. There's going to be products that are available, always will be, but you better have a second choice in mind because it may not be your first choice that is available right at that time. What not to expect, Danny?
Yeah, so I mean, obviously with supply shortages and with some of the intense cost pressures that I certainly read about, and I'm sure some of you are experiencing, I don't think that the consumers will experience heavy discounting, certainly on select categories. So whereas in years got past, there was always all those specials all over the place, I don't think those are going to be as plentiful this year as it has been in the past.
From a product standpoint, we're going to continue to see the proliferation of RTDs. And in many shapes, forms, sizes, flavors, about everything that you can think of, it's going to be coming out with this ready-to-drink solution. And that's not going to slow down. We see it happening at a very, very rapid pace. It has been for the last couple of years. And that's going to continue as we go into the holidays of 2021.
And so we're still going to grapple with, like, what do we call this category? We've heard everything from ready to drink, fourth category, alternative. I think we're all trying to figure it out, but it's definitely, it's out there and it's growing fast and getting blurrier.
And then we are going to see increased travel versus last year, that more people are going to get on airplanes, more people are going to go visit family. There is pent up demand to do that. It's going to be somewhat easier to do that this year. But we also know that the airlines are under stress. So while there will be increased travel, it may not be as easy as it has been in the past. And
yeah, I've taken 2 trips this year. I'm taking 1. So I'm part of the better than last year, but not as good as the year before.
You're very brave, Danny. And then we're going to continue to see the growth in online shopping. And I would even expand that to be all things digital, how we reach consumers, how we interact. But online shopping is going to continue to grow.
Yeah, I mean, we're going to see that for sure. But I mean, back to the first point, it's not a perfect supply chain out there. So, I mean, the advice sort of more broadly speaking is figure out what you want or shop for it early, try to order it early because it may not be there when you want it, unless you're willing to paddle out to sea and find that container ship with that bottle of champagne or cognac you're looking for.
And then when we look at the wine category, high-end wines will continue to perform well. We saw earlier that the wine category is down, and it is volumetrically, it is down and down pretty significantly. However, the very high end is doing well. And we anticipate that we will continue to see that across both sparkling and table wines.
Yeah, and I think the issue for the wine category is that's great that high-end wines are performing well, but it's increasingly tougher for the 10, and we can move it up to 11 and 12 almost and under to keep pace with that high end. It's not happening. And that's still almost 70% of the category volume is at that 10, 11 and under level. So that's critical to figure out how to rejuvenate that segment with some growth. So let's talk a little bit more about 2021. I mean, obviously a big part of it is what COVID trends. And we're seeing that right now we're on a really good decline trajectory, which is great. and we're hoping it'll continue. Let's hope so, obviously. We're obviously coming into colder winter months where more people will be inside. Hopefully we can keep that trend, that red line, keep moving down. But let's talk about what consumers are saying about the upcoming holidays and how they'll celebrate it. And we've used some data from a firm called Morning Consult that does a lot of really good consumer survey work. And they've asked questions about what do consumers think, and this is not specific to wines and spirits, but what do they think about their upcoming holiday celebrations? There's no question, just looking at these numbers, and you can put yourself in the place of this, that relative to last year, more people will be having their usual holiday get-together. It's more about your place or mine versus not at all. So hopefully we'll put that X on top of the not this year. And we should expect, more celebrations this year, more get-togethers, and bigger celebrations, bigger get-togethers than last year. So a much improved situation versus 2020. We also wanted to look at it from the trade perspective. So what is the industry? What is the trade saying about it? So SipSource does surveys of industry leaders. And the question that we asked this time, just recently, was thinking about the upcoming holiday period, how do you think total beverage alcohol sales will compare to the 2020 holiday period? The trade, and then we asked them to put them into buckets of significantly lower, slightly lower, about the same, slightly higher, significantly higher. As you can see here, the trade is really bullish about spirit sales. 83% said slightly or significantly higher for spirit sales. 30% alone said significantly higher. That was much less so for wine. 41% said that wine sales would be up, but it was almost the same number, a little bit less, said it was going to be down, and that wasn't the case for spirits. So from here, let's dive deeper into the wines and spirits segments that have both been leading the way in terms of strong trends, as well as those that have been on the weaker side. So Dale, how about you take us through that?
Yeah, and before I jump in on the spirits, just to clarify the question that was out there. So when we talk about high-end wine, there's a pretty clear mark here that is below $11 is declining very strongly, and we'll look at that. And then above $11 is doing better. As you go up in price point, 11 to 15 is okay. 15 to 25 is a little bit better. Over 25 is better than that. And that does apply to both the on-premise and the off-premise. We're seeing that consistently in both of those channels. So thank you for that question, Steve. Now let's dig in on spirits. And what are we seeing, and what are the categories that are really doing well within spirits? And really, as I look at what's going on with the categories that are listed here, it really is almost a return for the spirits category to pre-COVID. These are the products that we saw growing very, very well pre-COVID. And what we've done here is we've looked at the bars are representative of 3 different time periods for each of these, because the road that all of these categories had to travel was interesting into what was happening in the marketplace. So the first bar, the gold, is a 12-month February 2020 ending date. Then what actually happened right after COVID hit? That 4 months ending in June. So that's March, April, May, and June of 20. And then what does the latest 3-month growth look like? So what we see here is, and when I talk about the things that are consistent, mezcal, Irish whiskey, tequila, rye, and scotch, these are brands, these are categories that were doing well before COVID. And then as soon as COVID hits, with the exception of tequila, all of them really got hit very, very hard. Some of that was just driven by their popularity in the on-premise. Mezcal, wildly on-premise driven. Irish whiskey, more on-premise driven than the average category, as is rye and single malt scotch. But we now see mezcal coming back. Irish whiskey up 16.7. Tequila was strong throughout the pandemic. It really did do very, very well. Rye whiskey is coming back strong with the on-premise opening. And then, both Scotch and Irish whiskey both had to kind of a double dip hit of tariffs and the pandemic, which hit against them. Ready to drink cocktails, though, are going insane. It is crazy how much that they are growing. And the pandemic was really an accelerator for them, and they're still growing 36.3. And then you can see the premiumization is occurring over there on luxury spirits. And that also was accelerated during the pandemic as people brought their cocktail experience in-house and started making those at home. The luxury category continues to do very well. When we look at what's declining, and on some of this, there is some noise in the data that we think that we were talking about, that Danny spoke about earlier. And when I think about Cognac right now in the latest 3 months is down 13.9 on volume. However, Cognac on the 12-month period is still growing almost 3%. Cognac has had a very, very strong growth. We do believe that some of the Cognac could be decline here could be related to supply chain issues, could be the products that are sitting out there in those on those container ships outside the port of Los Angeles, even though I don't think they'd really go that way, probably come into the East Coast. But also with the flavored products, when we look at flavored rum and flavored whiskey, those are products that have done very well. They were growing very nicely, but in the latest 3 months, we're seeing some softness in them. With gin has just kind of been in that range all along. The high-end gin is doing very well. It continues to grow at the luxury level, but the rest of the gin category is not. And then US whiskey blends, a lot of that is just driven by trade up. As people premiumize into straight bourbons and into ryes, the US blended whiskey takes a bit of a hit. So when we look at wine and what's going on with wine, the sparkling category has been doing extraordinarily well and really did kick in and held. Prosecco was a category that maintained very, very good growth throughout the pandemic. And it's still growing well, up 16% in the latest 3-month period ending September. Cava has been struggling. It's up. Sparkling other, and basically sparkling other is everything that's not included in those other categories. Champagne, we're going to take a deeper dive on champagne just to give you a little bit of a look. But sake is one of those categories, again, very heavy in the on-premise channel, got hit very hard. Now that on-premise is opening, sake is coming back very, very strong. I would also note here that, when I show that champagne is down minus 2.2%, just to give you an idea on how things are. That is one of the better trending items at minus 2.2, and vermouth at minus 2.8. In the latest 3 months, those are actually two segments that are doing well. But as we spoke about, the over 25 wine category is growing 17.5% right now. It is very, very small volumetrically, so it's not able to withstand and offset the losses. Next slide. So when we look at the fastest declining wines, and when we look at this, port, and port's been struggling, and it's up and down. I think that we'll see that minus 31 is probably overstated. Some of that is timing, but it will likely come back up there where it's going to be down in that probably mid-single digit down to low double digit. The rosé category showed great growth. It was on a run. Right now, though, it's not. It's struggling and it's not doing well. We see that with sangria. Sangria got a big bump during the pandemic, but it is now flattening out, not doing well. Sherry, Syrahs, and then we see that under 11 table wine. And table wines under 11 have been struggling for quite some time. And that's about 75% of the volume is within those products. So that can be concerning for the category, and it's difficult to get growth overall for the category if those areas are down. So we talked about champagne, and when I look at champagne, it's been very, very interesting to follow champagne. So in addition to and you can see that the middle slide there, the middle point, October through December of 2020. Then we've just put the next 3 quarters on the trends on what's happening within the total sparkling category versus champagne. And what we can see here is that Champagne took a very, very big hit right after the pandemic hit. A lot of that was to do with on-premise. Some of that was to do with the lack of people looking to celebrate. But then we got a big bump in July. It was up 25.7 in that July through September period. Last holiday, though, sales were soft on Champagne, and we just didn't see much happen. But it came out of the first quarter very, very strong. The first 6 months of the year have been extraordinarily strong for Champagne. You can see up 66, up 76, but we know that there's a well communicated potential for a supply shortage on Champagne. So we see that here coming out of the July through September period, that third quarter of this year, Champagne's down 2.2%. We anticipate that Champagne will end the year up on a 12-month basis, but it's going to, those growth rates are going to come down as we head deeper into the calendar year.
So Dale mentioned a couple of times now that higher end table wines are performing well. I'm going to take another view of that, and that's through the DTC channel, courtesy of SOFO Ship Compliant and Wines Vines Analytics that track DTC wine shipments. And here we're looking at the March through September period of each year. And the reason I chose March is obviously last year in March is when COVID really hit. So here we're looking at the DTC shipment channel that's very strong, if you think about the fact that this does not include tasting and carryout business, and if that was to be included, that would be on top of the numbers this year. And that would be miles ahead of where carryout business was last year because it wasn't happening last year. So that paints, I think, a really positive picture for this channel in terms of numbers, where the average price of a bottle of wine is close to $40. That's way ahead of what the average retail price of a bottle of wine would be through 3-tier. And if we go down even deeper, that growth is really being led by the luxury wine and almost $100 plus segment. So there's no question that the discussion around within the 3-tier that it's the high end that's doing well. That's also synonymous with the high end of the DTC channel, where also the higher price tiers are performing well ahead of the total. And obviously this channel is more higher end in general. Dale also mentioned that we should expect increased online shopping. I mean, that's kind of almost a no-brainer. But let's look at the numbers, and this is from our friends at Nielsen. Let's look at the numbers for e-commerce wine, which is red, and e-commerce blue, which is spirits. And these are monthly dollar sales trends of the e-commerce business for both of those two categories. Online sales March through August this year are way ahead of where they were pre-COVID. So if you go to the left of where that COVID block is, in fact, March through August this year is about 2.5 times what it was pre-COVID for wine, and it's 5 times more than it was for spirits, obviously spirits on a smaller base. But both are about 30% below where they were last year. And last year, again, it was that huge rush when no one was, or people were nervous about going out to stores to shop, and people were learning about what was available online if they didn't know already in the wines and spirits space. So we will start to see that line move up again coming into the holidays, as it traditionally does, likely not ahead of the spikes that we saw last year, certainly for wine. That's a pretty big mountain to hit for wine, less of a hurdle for spirits, but we'll start to see the line moving upward. It'll be certainly well ahead of where it was pre-COVID. It'll be tough to exceed those huge months right after COVID from 2020. And what really fueled those e-commerce increases, it wasn't consumers that were new to wine, or it wasn't consumers who were new to spirits, and it wasn't really consumers who were new to online for other things, in their world of going online to buy things. But it was primarily consumers or people that were new to online for wines and spirits. So I put this chart up. The number of buyers is the number of buyers who are buying wine on the left-hand side, spirits on the right-hand side, is the red line on this slide. And you can see that it moved really in tandem with the blue sales bars. So as the number of buyers increased, the number of how much they were spending obviously online also increased. And as that decreased, coming just off of the COVID peak, so did dollar sales through these e-commerce channels. So it's buyers driving those sales trends for the most part. And broadly speaking, and I'm going to go back to the morning consult survey, over half of consumers, first of all, on the top headline, are saying that they will rely on more delivery and mail. Online is obviously a huge piece of that, rather than in-person gifting. What's different this year is that's largely as a matter of convenience this year, whereas last year was more about safety and pandemic concerns. But the one thing that we do know, if you look at the bottom number, COVID did accelerate the online learning and preference curve. So that's the one really positive thing that it did for buying things online, inclusive of wines and spirits. So what does that mean net for 2021, Dale?
So as we look ahead, and the bottom line is that we believe that the October, November, December period of 2021 is going to be extraordinarily strong. And when we put out predictions, we have put a 12% growth rate on spirits for that same 3-month period compared to last year. We believe wine, which was down 8.9, is going to improve dramatically and come up to minus 2.0. And that for those 3 months that we anticipate seeing wine and spirits grow 5% in volume. Now, when we think about why that is, a lot of that comes back to the second shaded area that is further back here, that is October through December of 2020. The net of it is the category is going against softer comps. And last year, when we watched the flow of business, really what we saw was a pretty significant shipments into retailers in the month of November, even to the point where some of those in previous years, you could see that bump in October, was held off in October. It happened in November. And then we saw just not much happen. The consumers didn't come out. There were not a lot of purchases. So we saw a very, very soft October through December. So we believe that's factor one that is going to drive a very good, strong October through December holiday. But we also believe there is pent-up demand, and that the consumer is very much looking to have a big celebration. They're looking to get back to closer to their previous ways of celebrating the holidays. So they're going to move in that direction. So we do believe that this period is going to be a very, very strong period. For the things that are happening on the positive side, it doesn't necessarily, I guess what I'd say is we need to be careful that we don't let the trends of those 3 months overshadow the trends that are happening, because some of that is based on comps. Danny, anything to add there?
No, I think that's right. I mean, as everyone knows, last year was just so atypical. And generally, a lot of people are looking at, okay, compared to last year, but also let's compare to a couple of years ago. And we're still in this period where just things aren't back to normal. And we're going to talk a little bit about that as we look to what to expect in 2022.
So looking to turn the year. So what do we think are the key factors and what's really going to be the important drivers and things to look out for as you plan your business for 2022? Number one, online shopping is going to increase. And again, that's all things digital to me. That's just going to be the way that business is done for a bigger portion of the population, of the consumer base. And that's going to continue on in a pretty strong fashion. Premiumization, we've been riding premiumization for a long time. And we want to believe that it's here forever. Danny's going to show a few things that may bring a little doubt to that. And I don't know that we'll be able to just purely rely on premiumization in going forward, that there may be some hitches in that we want to be aware of. RTDs aren't going anywhere. There's going to be expanded entries. There's going to be expanded volume coming from there. There could be some shakeout on what brands are winning and some rationalization in that, as there have been just an explosion of products within that. We expect the spirits category will continue to steal share from wine, and that it will outpace the wine category. tequila is going to continue to lead the growth of mainstream spirits. That category is extraordinarily strong and continues to build. And that is a category that I think will be able to continue on with premiumization and continue to grow. Luxury wines may thrive, but mainstream table wines below $11 likely going to continue to struggle. The on-premise, while it's rebounding and it is getting better and getting stronger, it's going to remain challenged. And when we think about the challenges that are facing there, the on-premise operator is faced with harder labor to acquire, more expensive labor, commodity costs are going up, and quite frankly, having to deal with less, with more patron difficulties. So I believe that the on-premise is going to remain challenged. It's improved, but it's not going to be getting back to pre-COVID levels anytime soon. And then supply chain issues will remain a factor. That also is not something that's going to go away. There's going to be shortages on certain segments and certain products out there. But the beverage alcohol category is not going to suffer in broad scope of that. But there will be some very specific areas that likely do suffer from supply chain issues. Danny?
So yeah, I mean, there's lots to drill into here if we had several more hours, but we don't. We've got about 5 minutes. So I think there's one provocative statement up here about premiumization, and should we continue to expect it? I mean, to me, everything kind of over the last year in terms of premiumization was a lot more nuanced than it has been in the past when things were more stable. But when we think about the nuances of premiumization, last year consumers were able to buy a bottle or a premium or even luxury wine or spirits in stores well below what they would have paid at a restaurant or bar. And many consumers also, ended up with extra money in their pocket as their other spending options, whether it was travel or concerts or sporting events, all those sorts of things just weren't available to them or were severely constrained. So a lot of people who might have spent money in a restaurant or a bar took some of that money and were able to afford a much nicer bottle, say, than they would have bought in pre-COVID times in the off-premise. But that's changing now as things start to move back towards some sort of normalcy. And as a result, I think we're seeing some of that premiumization rate start to decelerate. It's not that it's not there, it still definitely is. It's just not at the same rate. And I'm going to show you a couple of slides to kind of put that into more of a picture. And we're going to assess that by looking at the difference between dollar growth rates and volume growth rates. So when dollars are growing faster than volume, that's either because the price of an item is increasing, which isn't happening all that much, or consumers are trading up, which had been the case over quite a long period of time. So if we look at wine, for instance, and again, just think of this, and this is week by week by week in the Nielsen off-premise measured channels. When COVID hit, we saw that premiumization difference, the difference between dollar growth and volume growth, really spike up. So you can see pre-COVID, it was at that kind of 2 to 3% level. And then it went up to that almost 8% level, went up even more around Christmas when people generally trade up and buy nicer things as gifts for other people. But we've seen that steadily move down since then, again, just in the off-premise. So we're seeing that rate of premiumization decline. It's not that higher price tiers aren't doing better than lowest price tiers, because they are, but just the rate of that increase has slowed down a little bit. And same thing with spirits, maybe even to a larger degree. Again, you can see when COVID hit, that the price mix difference between dollar growth and volume growth really spiked up. And it stayed high through about, I'd say, the end of first quarter of 2021, but it significantly moved down since then. And again, just think about your behavior. If maybe you were buying that really expensive bottle in a store, now you're going to restaurants and bars, maybe you're spending that for that really expensive stuff where we know that margins are higher and you have to pay more in a restaurant or bar for that glass or that cocktail. And maybe you're not spending that same luxury, you're not spending on that same luxury bottle in a store as you might have in the past. So I just think we got to think real carefully about premiumization as we're seeing all these channel shifts. And then think about consumers. They can spend money now on concerts and travel and all those sorts of things. So while I think trade up is here and will continue to be here, it may not be at the same rate as we've seen over the last year or so. One last thing that I do want to talk about, and throughout this whole piece, we've talked about the channel shifting. I mean, obviously that's a huge part of what we've seen since March of 2020 is consumers went from the on-premise to the off-premise. And with SipSource data, we've come up with a little way to kind of express that as an index and look at channel recovery of the on-premise, with SipSource being able to provide a unique view of that. So we've looked at the recovery of on-premise through an index that we've called the channel shifting index. And what that channel shifting index is, it's the on-premise share of on and off-premise together now compared to where it was pre-COVID. And we call pre-COVID that 12-month ending February 2020 period. And these are all indexes. So the closer we get to 100, the closer the on-premise is getting to where it was pre-COVID. If you look at all the numbers, the depth of decline on a 12-month basis was February 2021, and Dale mentioned about half a couple of times on-premise versus where it was before. And you can see that in these numbers where the spirits CSI or channel shifting index was 47, wine was 42. And since then it's been on that steady increase as that channel recovers. And that was pretty steady all the way through till about August, where in August it kind of stalled a little bit. And if you think back about August, that was when there were more concerns about the Delta variant and so on, and people maybe retreated back a little bit from where they had been trending up until that point in time. But then it moved ahead again in September, in the 3 months to September. So for the last 3 months ending September, that index now sits at 94 for spirits and just over 84 for wine. So it both moved up, both are moving up in September, but it also says to me that part of the wine softness is just that much lower rate of recovery for wine in the on-premise than we're seeing for spirits. These are obviously big picture national numbers. There are significant variations in that CSI by region. For instance, the Pacific region, of which California is the largest state, tends to be a laggard. There's also significant variations of that index by product segment. So there are some product segments that are over 100, i.e. the on-premise importance to that product segment is already past where it was pre-COVID, but there's many other ones that are lagging significantly. So Dale, why don't you, I think there's just one more maybe piece of color you can add to that picture of the on-premise.
Yeah, and the other element that is at play here is that we have had restaurants closing, and the on-premise category has definitely seen outlets that were not able to reopen. This is data that is from the VIP outlet database. When we look at this, as you can see, in January of 2020, about 360,000 licensed on-premise accounts to sell alcoholic beverage. By the end of December 2020, there were 40% fewer of those that had declined, that were not in business at that point. We have seen it very much growing and coming back, but we can see here that 9 months into this year, that while it has grown 49%, we still see that there's 11% fewer licensed accounts out there selling alcoholic beverage within the on-premise. And that number's starting to stabilize. And we would anticipate this is a category that, generally speaking, has a significant amount of churn in general. And we're seeing that right now, and anticipate that this is likely for certainly the short term and into the middle of next year, going to hang around that 10 to 12% closure rate. And as I said earlier, it's not getting any easier for the on-premise operator. There's still a lot of headwinds. There's still a lot of factors that they're facing to keep their business going. So not out of the woods yet. And that's one of the things for those of you who rely on-premise for your business. This is one of those areas that you have to keep an eye on as well. So the key takeaways as we look at this, holiday 2021, they're going to be big versus 2020. We anticipate these doing extremely well. We're looking for a big holiday. Spirits are going to continue to win into 2022. Luxury wine will be strong, but the below premium will struggle. Supply chain disruptions will impact certain segments. I don't think that they will have an impact on the macro level of the industry, but individuals will. As I just spoke of, on-premise, it's a long road to recovery, and that segment of the business is still going to have some struggles that they have to fight. And then products that will win, and when we think about what type of products are going to continue to win, products that offer convenience solutions for the consumers, flavors, and then health and wellness related benefits and attributes. Those are the areas that we see in 2022 that the consumer is going to be continuing to purchase, and that those areas will grow. So with that, we can turn it over to questions. Thank you all very much, by the way.
Dale and Danny, thank you very much. And those in attendance, thank you for your questions. They really some good ones here. I tried to combine some because some were a bit redundant. So Danny or Dale, I'll toss this one up. How will rising gas prices and other economic factors impact premiumization, both on and off premise next year?
Yeah, I mean, I do think that all of those economic factors, I mean, I see another question here about the elimination of the stimulus checks. I mean, there was a lot of extra cash for some folks who were, less financially impacted that were of benefit to people, and for those that were impacted economically, there was some stimulus and so on that helped. But as those things either go away or prices increase, and it's not just gas prices, we all know about inflationary concerns. I mean, all those things potentially take money away from some things. You have to have food. I mean, I'd like to think that, you don't necessarily have to have a drink. It's always nice to have, but people are going to have to make choices. And with the range of wines and spirits that are in the marketplace, I mean, people could choose to save a little bit. So those are all part of I think some of the premiumization challenges. I still think there'll be that ongoing trading up. I just think it may not be at that same rate as we saw before.
Yeah, and to add one thing that I would say, and I'm going to, Danny, what the best form of flattery is stealing from you, Danny. Early in the pandemic, you used the words, and I think if you recall correctly, you had impacted and insulated consumers, right? The people who were impacted by the pandemic and people who were insulated. And a lot of the premiumization, quite frankly, something like gas prices, there's a group of consumers out there that are insulated from that. They're not going to change their lifestyle. That does not impact, filling up their tank of gas is not a big expense for them. That's a population that's driving premiumization. Those people are going to continue to drive premiumization, and they're going to continue to support those brands and move it. And they have a disproportionate impact on luxury goods. But there is that aspirational consumer that is below that Danny, I think, spoke about there, that's going to be a little bit more difficult for them to reach.
Okay. Related to premiumization, dig a little bit deeper into premium vodka and tequila trends. And is tequila taking from vodka?
I'll start, Danny.
Okay.
You went first on that one, so I'll let you clean up the mess I make with this. Yes, tequila. I think that tequila is taking some occasions away from vodka, and tequila, I think, is taking occasions away from everything. The growth on tequila is phenomenal, and I think that. When I think about tequila, and it's also just across all price points. I can't think of another product, another spirit-based product that is served by the pitcher in the on-premise. Pretty common in a Mexican restaurant to go and grab a pitcher of margaritas for the table. So that's going to continue. Also, I think that in the on-premise, I think that most mixologists find tequila more interesting than vodka to work with, and I think that that's going to continue. And I also think that tequila did a great job of recreating or creating a space to compete against some traditional brown goods with the sipping occasion. With the person who is having a very high-end tequila, they're having it neat and just enjoying it. That is replacing what could have been a Scotch or a high-end bourbon experience before, or high-end occasion. So I think it's pretty broad on where tequila is sourcing business.
Yeah, I think you did a good job, Dale. I mean, I think as I heard you say it, I would just, the word diversification comes to my mind. I mean, tequila is diversifying into different types of occasions. And there's a huge range of price choices and a huge range of types of drinks you can have with tequila and ways that you can drink it. And, to the extent that Hispanic trends play into that and so on, not that those are the only people that drink tequila, obviously, but I mean, there's just a lot of things going for that category. And, like most things, I mean, not everything is on top of everything else. So when people are making choices and, they're increasingly choosing tequila over some other spirit-based products.
Yeah, and something we learned at WSWA's brand battle was the labels. The tequila and the mezcal labels are very creative and very engaging. And so people find that they're drawn to those labels and tend to pull them off the shelf. Okay, moving on. A lot of questions about RTDs, but if I could sum it up, it would be this. What are the RTD indicators for success versus failure? Spirits base versus malt? Does ABV play into that? What are we looking at?
Boy, how long do we have again? I'm not sure. I mean, Dale and I spend a lot of our time looking at that RTD category right now and trying to sort it out. I would certainly say that for a chunk of consumers, it's about health. For a chunk of consumers, it's about flavor. The one thing that I feel like it's just less relevant to most is like what the base liquid is. I mean, I was looking at some package the other day. I couldn't even find out what the base liquid was, at least by what's on the package. So I think the cues are around flavor just for some and around health and wellness for others. And for a lot, it's the combination of the two that seem to be driving it. And the package size itself. I mean, I've said for a long time, a 750 ml bottle is not for everybody. It doesn't work for everybody, or if that's the only choice you have, I'm spending a lot of money and I may not, if I only have a couple of glasses, then I've got a lot of stuff that's sitting around. So I think the packaging size and type is really playing a big part in some of the trends as well.
Yeah, and to build on that, and I think something that Danny said there, and he talked about a couple of different consumer groups, and this category is appealing to a very, very broad group of consumers, and they have different appeal points, and they're gonna go to that. The number one, the one thing nobody can get away from is taste. You've got to have taste. You got to have flavor. That's one of those things. I would also say that route to market solution is key to this, and that there's a handful of brands out there that have done very, very well because they solved their route to market early. They were able to get in there with the right distributors. They were able to get in there with the right retailers, and they were able to get their product to market, and that has paid off very, very well. I think there was a question in there that was about canned wine, and is canned wine considered RTD? And it's not. Right? We're not at this point in time calling canned wine RTDs. That's a canned wine segment. That's a separate area. Wine spritzer, wine-based cocktail, those are in there, but this category is going to grow, and the traditional success factors are going to continue on. Route to market, flavor, wellness attributes seem to be for some, and base alcohol does matter to some.
And route to market, I mean, people should consider multiple channels. We've seen a pretty large increase in ready to drink, however you want to define it, in the on-premise. I mean, that really wasn't a channel for ready to drink before, but it's grown the most in terms of the on-premise importance to that segment than any other segment. still lower than, other spirit categories, for instance, like tequila and so on, but it's grown a lot. The convenience channel is pretty important, much more so. So it's, what's the channel strategy, and can you have a presence in those channels? I think is really important. And then to Dale's point on the definition, ready to drink, canned wine isn't, wine spritzers is. Some might define it differently. Part of it is that there isn't one universal accepted definition that everybody uses, but we'll get there maybe at some point, but there's a little fuzziness around it.
With the labor shortage, with the higher proofed RTDs, do you see that solving the on-premise need for mixologists, bartenders as a quick fix right now?
Yeah, and this is, I think I've gotten on my soapbox on this one a lot. I think it's a huge opportunity, and I think it is. And I think with the explosion of takeaway, the explosion of delivery, and now as I reopen my restaurant, I've got people sitting at my bar. I've got a more full restaurant. Plus I have to service to go, and I have to service takeaway and delivery. I need a solution for that on the cocktail side, and that can certainly be an RTD, a ready to go, high quality product. I might have one batched up signature cocktail, but for some variety, I'm gonna move to those cans, and I think it will be something that will definitely drive it. I think the on-premise is a very big opportunity for RTDs.
The last time I looked at it, our on-premise for RTD for cocktails was almost getting to 10% of the total, which, and it was like 3 or 4% pre-COVID.
Wow. In terms of the beverage category, spirits category, which is at most risk for growth due to price increases and pass-throughs from the cost of goods impacts, which category is at risk for decrease?
In spirits or overall, Michael, was the question?
Spirits. What spirits category?
I don't know. I mean, the only wouldn't be probably an area of expertise, but tequila is obviously growing like crazy. It's relying on agave from Mexico, and if that's to me, that feels like the one that could be threatened the most if supply shortages aren't addressed. But perhaps they are being addressed. I'm not sure, Dale, if you have any other insight.
Yeah, I think brown goods do somewhat compete with brown goods. And I do think Scotch is one of those categories that I'm trying to keep an eye on, not just because I consume it. But that there are some substitutability there with high-end bourbon. Vodka seems to be, and I saw some questions coming across. Vodka is so big, but vodka kind of everything kind of operates in that +2, -2 range on the long range. So I don't think that it will be vodka. I think that cognac. I'm going to keep an eye on cognac with what's going on there. Category that had huge growth. Let's see, where that continues and where that goes.
I think more broadly, I mean, the wine category, there's a lot of cost pressures, and whether suppliers will take price, number one, and whether those price increases will make it all the way through to retail and to the consumer, would be a question mark, because we talked about, say, that under 11 or 12 category in particular. I mean, it's down right now. You start taking price on that, and that puts further pressure on it. But there's definitely a lot of cost pressures in general, whether it be due to harvest and what came in short, or whether it be with insurance costs or labor costs. I mean, just a lot of pressure on wine pricing and costs.
Okay, final question. With the return of dinner occasions as well as upcoming holiday parties, so looking at today's date through December, where are the opportunities for categories as it relates to the dining occasions and holiday parties? Who stands to gain? Who stands to perhaps not gain?
I mean, I think like for Thanksgiving in particular, to me, and others may challenge it given some of the changing trends, it's still, for me, it's a bottle, nice bottles of wine around a dinner table that I didn't have last year. I mean, we didn't have one at all. Well, we had a bottle, it was just myself and my wife. Now we're gonna have a few people over and I'm gonna get a nice bottle of wines. I think there's a big opportunity for wine, especially around Thanksgiving, that just didn't happen last year.
I think that's right. And when you have people over, you always overbuy. When you overbuy, you have that product in your house, and you're gonna get rid of it after the company goes. I do think, and when we spoke about Christmas parties and we talked about catering and that, I think that plays very well into the RTDs because hotels got hit as bad as anybody. And event places. So if you're having a Christmas party at one of those, they're struggling for labor and they're going to be looking for easy solutions. And I might have somebody mixing drinks, but if you came up and asked me to make a fresh mojito, I'm going to tell you no. Yeah, I'll pour you a rum and Coke. I'll pour you a vodka soda, but it isn't going to go too much past two ingredients as we're trying to service all those people. So I think simplicity will win, and I think RTDs could fill that void.
Okay, well, that marks the conclusion of this program. Dale, Danny, thank you very much for your time and analysis today. It was very insightful. For those of you in attendance, thank you for joining. For those of you who submitted some great questions, we hope we got to all of them. There will be a recording of this live webinar that will go out, as well as the key takeaways for all those who registered. And again, we hope you join us for our next Wine Spirits Wholesalers of America program. Thank you. Have a great day.
Happy holidays, everybody.
Happy holidays.